Chinese share prices rallied on Tuesday as heavily indebted property developer China Evergrande prepares for $1 billion restructuring. Beijing is taking an active role in that process to prevent the disorderly collapse of what was once the country's top seller of homes and office space. The central bank is also easing monetary policy settings to give the economy an extra boost to reverse a recent slowdown in economic growth. Miranda Lin has more.
Management tried to delay it for months with last-minute payments that kept creditors at bay. Now China Evergrande is finally restructuring its billions of dollars of debt. But the government isn't letting the real estate giant map its own way out of the mess it created. Beijing has joined a company committee to keep Evergrande from dragging down the rest of the industry.
I think what we're starting to see unfold and what we're going to see unfold is that authorities aren't going to save Evergrande per se, but they are going to ensure that the sector is well insulated, especially those firms who aren't as highly leveraged.
At a meeting of the ruling Communist Party's decision-making body this week, officials signaled they would ease restrictions on real estate investments, sending shares in mainland developers surging. China is also opening the liquidity taps to grease the wheels of the economy. This week, monetary authorities slashed reserve requirements for local banks, freeing up almost $190 billion in cash, which can now be lent to households and businesses.
China, in the process of overcoming difficulties, will keep growth stable and steady, sustainable and capable of achieving long-term stability. China's reforms are constantly being advanced, and China's opening up is persistently expanding.
It comes as pressure increases on Beijing to prop up the world's second-largest economy. In the third quarter, GDP grew 4.9%, slowing from almost 8% in the previous 3 months. Analysts expect the slump to continue in the current quarter as China struggles with supply chain bottlenecks, an energy crunch, and pandemic-related restrictions. Miranda Lin, TRT World.
For more, let's go to Einar Tangen. He's a senior fellow at the Beijing-based think tank, the Taihe Institute. Einar, yesterday was the end of the 30-day grace period related to some overdue coupon payments. Can we say that the company is now formally in default? And what are the next steps for a formal default declaration?
Well, yes. Once you're in default, the creditors can form a committee and they can basically say that they want to push for liquidation. I don't think that's going to happen in this particular case. With the restructuring that they're proposing, really what they're doing is they're shifting from bank lending to bond lending, and the government is given tacit approval, although under their watchful eye. They're not impressed with the way that Evergrande got away from its core businesses. It was spending billions on creating football clubs and stadiums and things like this. And they're also, this is a very strong statement to the rest of the industry. Real estate is about 25% of China's GDP. But the Chinese government is, very anxious to not decrease prices of real estate, but to keep them cool, but still manage the economy.
Right. The company last week said it planned to actively engage with offshore creditors on a restructuring plan. Can you help us understand really what this means?
Well, I mean, they'll be trying to put together a creditor committee. Obviously, the bondholders want to get as much. The creditors want to get as much money out as possible. They don't want to take a haircut through a liquidation, but they don't want further degradation in the health of the company. I think most people are now convinced that the Chinese government is going to step in. You saw today this 0.5% cut in the rate. In the reserve rate ratio, that's the amount that banks have to keep in their accounts. This freed up, as was put on there, about $188 billion. Very strong sign that the Chinese government is being very pragmatic about it. They're going along slowly and steadily. They're not going to make sudden moves, but they have the toolbox. I mean, China's reserve rate ratio is at 8.4%. Compare that to the U.S., which is at basically zero, and the EU, which is at around 1%. So they have a lot more ammunition, not only in that box, but in many others.
In credit markets and in recent years, we've heard this expression a lot, too big to fail. Could this company be, on the other hand, too big to bail out in a way? I mean, we're talking potentially about $300 billion in liabilities. Is that what you think? Could you tell us a bit more about the reluctance of the Chinese government to intervene in this case?
Well, they don't want to intervene because they don't want these developers to believe that they, as you said, are too big to fail. So, remember, these are liabilities, but they're also assets, and there's about $300 billion in assets. What the Chinese government doesn't want is the ordinary house buyer who put money down on an apartment or a house to be, basically, out of luck. So what they're doing is they're going to make sure that those people who bought houses get them, and they're going to make sure that the bond market, that these entities stay close to their knitting and do not get above themselves. They want to cool down the amount of money that's going into municipal coffers. Land prices are the one element that really boosts the cost of property. And you've already seen a lot of lower prices and less interest in that as this cash crunch, which is affecting the whole industry, has taken hold.
Einar Tangen, thank you very much for being with us.